He's the President and Chief Executive Officer of Dollar Bank, headquartered in Pittsburgh, Pennsylvania. Dollar Bank is a full-service regional bank operating more than 50 branch offices and loan centers. Mr. Oeler is testifying on behalf of the American Bankers Association, which was founded in 1875 and is the voice for the nation's $13 trillion banking industry and its 2 million employees. Welcome, Mr. Oeler.
Thank you, Mr. Chairman. Thank you for this opportunity. As you said, I am President and CEO of Dollar Bank, a traditional mutual bank that has served Western Pennsylvania and Northeastern Ohio for over 150 years. Any changes to the interchange system will impact all small businesses, small banks included. The vast majority of banks in our country are community banks, small businesses in their own right. In fact, over 3,200 banks and 6,100 credit unions have fewer than 30 employees. When merchants choose to accept payment cards, they pay a small fee for the many benefits that come with accepting electronic payments. For example, a $10 debit transaction would cost a merchant less than 10 cents in interchange. In return, retailers typically see more customers, shorter wait times at the register, immediate payments to their account, and less hassle and risk of managing cash. They also generally transfer the risk of fraud to the bank. These interchange fees pay to support a system that works 24/7, 365 days a year, almost anywhere in the world. These fees are under attack by retailers, yet they are no different than any other costs of running a business. Restrictions on interchange fees were included in the recently enacted Dodd-Frank Act. The provision called the Durbin Amendment requires the Federal Reserve to dictate the pricing of interchange on debit cards. The Durbin Amendment, which was added to the bill without any hearings, limits consideration of many important costs of providing debit cards and does not even allow for a reasonable return on investment. Such uneconomic pricing will hurt my ability to offer reasonably priced banking products to consumers and small businesses in my community. Let me illustrate this. Last year, we processed 16 million debit card transactions and made less than $3 per month for each debit card. This revenue is important, but does not cover our costs of maintaining a transaction account, which runs between $12 and $15 a month. Without this income, it becomes very difficult for many banks to continue to offer low and no-cost checking for our customers. The loss of revenue has other impacts as well, including making it harder to make loans. This is even more pronounced for Dollar Bank. Since we are a mutual, the only way we can raise capital is through retained earnings. If we lose interchange income, it means we'll be unable to make as many loans in our community. In fact, if we would see a 50% reduction in after-tax income on interchange, it means 200 fewer small business loans that can be made each year, year after year. For the industry as a whole, a 50% loss of interchange income would mean that lending could fall by as much as $74 billion. Congress recognized that setting price controls on interchange fees will have a significant negative impact on roughly 16,000 small banks and credit unions. Congress attempted to remedy this problem by providing an exemption to the price controls for small banks. While this idea sounds good, there is no community banker that believes such an exemption will work in practice. As with any price controls, there are inevitable unintended consequences, market distortions, and higher costs for others, including consumers. While I realize the ink is barely dry in the Dodd-Frank Act, the negative consequences for banks and bank customers are so great that Congress should revisit and repeal this provision. Moreover, Congress should avoid further price controls, such as a restriction on credit card interchange fees. Government price setting of business-to-business transactions hurts the ability of local banks to serve consumers and local businesses. It affects banks in low-income communities looking to provide low-cost banking services to the underprivileged, and it stifles innovation in a system that has supported the development of electronic bill payment, the online retail market, and the promotion of enormous operational efficiencies for small businesses. Thank you for the opportunity to present the ABA's views. I'd be happy to answer any questions you may have.